Bloomberg Audio Studios. Podcasts, radio, news.
Bruce Flatt, thank you so much for speaking to Bloomberg. Now, a lot has happened in the last 12 months. When you look at your investment thesis, has anything changed in where you see value and where you see our economies going?
The short story is not much has changed. Now, as you know, every day the news changes, and but what we try to focus on are long-term trends, and focus on the long ball. And within that, there are going to be fluctuations all the time. I'd say everything that has happened over the last year is all positive to the long-term theses we have. We're still going to digitalize the world, and we're going to do it faster, and we're going to have more. We're still going to deglobalize, and we're going to do it faster, and we're going to have more. And we still are going to transition to renewables, maybe not because of renewables, but because we just need more power. So I think all those three trends are maybe more important today than they were before. So we don't get too wrapped up in the day-to-day effects of what's going on rates or economy or different things like that.
Has your U.S. business been impacted at all with some of the Trump policies?
What we do is go to great countries, invest in great businesses or assets, own the backbone of the global economy with great people. And we don't trade over borders. So in the United States, we have $500 billion worth of assets. They're all local assets. We sell the goods to local companies and people, and we're a local company, as we are in every other country of the world. So there's no doubt, there's always some ramifications on everyone, good or bad. But for us, it's pretty small because we just invest in places and we don't trade over borders.
Bruce, when you look at regions around the world, where do you see the big next opportunity?
We're in 30 countries, and therefore, and the success of our investment strategy for many decades has been to have global business and to be able to pick the spots where value and price don't intersect. Where markets are up a lot, we probably were selling things, and where markets are down a lot, we're probably buying things. And so I would say it always differs. In Europe, for example, it's a value market. Multiples are lower. In the United States, the trends behind what's going on in the United States are very large. So they're just different opportunities. But I would say if I had to pick a spot where more capital will go over the next 18 months, it's probably in the United States.
Now, what about the Middle East?
You know, we've had a business there investing in the Middle East. Unlike many others, we've been there for 25 years. We have many big businesses, from payments to schools to real estate to pipelines. And it's been a great place to invest. So yes, we're still doing more there. We're the largest foreign investor in the UAE, for example. I think we have $12 billion of assets. So it's fantastic. It's just not, we can put 12 billion at a crack into investments in the United States. Just the size of the economies are just different. The United States is the largest, deepest, and most robust economy in the world, and that's not changing anytime soon.
The prospects for AI are also infrastructure, and therefore some of the data centers. How much of an increase will we see from Brookfield? The
thing that I guess that hasn't really been factored in yet is that data center build out really only started 10 years ago, and it was just getting started for cloud, and then the ChatGPT moment happened. And the amount of increase in requirement to train models and for learning is very, very significant. And we're talking trillions and trillions. So the opportunity for us, as we've always tried to move our backbone of the global economy along with what's changing in the world. And increasingly today, the world is digitalizing, and the final step of all of that is providing compute capacity. And so we continue to work on opportunities like that, but these are large, large sums of money. Some of these sites, like a 1,000 megawatt, 1 gigawatt data center site is with compute capacity, power to compute capacity all the way through is $50 billion. These are almost unprecedented investments ever seen in hundreds of years.
But are we overestimating or underestimating the pace of change that this needs to get done?
You know, I would say you never know at the moment in time. But if I had to guess, we will. Everyone gets excited sometimes, but in the next 10 years, we will look back and be extremely surprised at the progresses that have been made. And probably the most important thing is that really what's happening is that it's the application of artificial intelligence into service businesses and industrial businesses, and the compression of the component of labor. And because of that, the productivity advances are going to be very significant. But that's going to be good for America because it means you can reshore capacity that you couldn't have made in the United States before, and that's going to continue to happen over the next 10 years.
Has DeepSeek changed anything for you?
I think all it does is show that when advances get made, they continue to get made, and progress, smart entrepreneurs figure out another way. And I'd say it makes the point. We are going to have better technology every day. We're all learning, and I'd say for us, what's really important is we provide the backbone of all of that. So we're providing the green power, we're providing the data center, we're providing the compute capacity, we're funding all of that, and that's different than we don't own a competitor to DeepSeek. If you did, you might worry about whether you had that. What it does mean probably is that there's more capacity required, which means they need more of our backbone. And as you bring costs down with anything, more use cases come about. And that's what's going to happen in the next 10 years as we evolve this business.
Bruce, if you're sitting in Europe, there's concern that actually you're being left out because China's going one way, the U.S. is America first. You worry about inflationary pressures and trade wars. What does that mean for Brookfield? Are there opportunities to be had?
Again, we're a local investor in countries. We're building out data centers all through Europe. We have the largest builder of data centers in Europe. We just announced a big deal in France for $20 billion. In all of our businesses, we continue to invest across the backbone. We're local players in local countries. We sell local things. And sometimes less money being available and less positivity means greater opportunity because there's less money available and therefore the opportunities are better. And so we're always selective with what we do, but I think there are still significant opportunities in Europe.
On private credit, you're a big player in private credit. Where do you go from here?
This business is going to get bigger. Our business and the industry in total is going to get bigger and bigger because this is just capital being pushed off of banks' balance sheets. It's less regulatory friendly on their balance sheets. They don't really want it on their balance sheets. It's being pushed to sponsor groups who are usually lending in the area where they have a lot of expertise. And our two biggest businesses today, or I guess three biggest businesses, are real estate infrastructure and direct lending in corporates, because we have a lot of expertise in those things. We just bought an asset-backed lender called Castle Lake, and we're going to continue to build out the business merely because I think the scale opportunity is there, and our clients can earn extra return in private credit than they can just buying bonds in the market. And that's really we're here for our clients. We're here just to service them, and if they can earn an extra 100 basis points over what they'd get somewhere else, this is a very exciting place for them to put money.
How much bigger do you think this market can get? Again, if you're good, it seems like you're doing really well, but if you're in that mid-level,
yeah, we're $300 billion today. I think it can be much, much larger.
In what kind of time frame?
Look, it will grow. With us, we always try to grow methodically.
Right.
Once in a while we buy something, but we grow methodically. It can grow, it can double, it can triple, it can quadruple over the longer term, and we'll just keep building it out. But I'd say the thing we want to make sure with every business we have, we're super responsible. The foremost thing we have to do is make our clients the returns we promise them. And if we can do that, this business will be very, very large 25 years from now.
Do you expect consolidation in that space, in your space?
Look, the asset management industry started from nothing 30 years ago, circa 30 years ago. There are 5 or 7 big players today. Some of us have done acquisitions to add in other sources of skills into the businesses. We've done some, others have done some. I think there's going to be it's never, one size never fits all, but there's going to be some very large players. We're one of those. And then there's going to be some niche players that fit a certain area. What's happening in the middle is so far in the last 18, 24 months, it hasn't been easy for them to raise money. We raised $135 billion last year in our asset management business. Not many others can raise that type of capital.
Are you looking to buy anything?
We're always on the lookout for complementary things that can add to the business and that we can deliver to our clients in a seamless way that don't conflict or compromise the investing skills that we have as an overall business. We need to be able to say to our clients, we're pleased to offer you an Oaktree fund because the team at Oaktree, Bruce, Howard, Armin, are the best in the world, and that they do great in opportunistic investing. And when we can do that, we're proud to have them as part of the team.
Bruce, can you talk to me about Oaktree? So you have 70% of Oaktree. Will you ever, become one?
Do you know, we're sort of one, but we've had a different attitude towards the acquisitions we've made. We like to partner with management teams. Today, the management has been transitioned to Armin Panosian and Bob and O'Leary, and the two of them are running the business, and it's run as a separate unit, and they own a part of the business, and I think it's good. Each asset management organization has a special culture, and ours is right for us, but it may not be right for that group or whatever other group we work with. So I think it's a fine line. Entrepreneurialism in alternative managers is really important, and therefore we've had this partner manager model. And it's worked so far, and so we're pretty happy with it.
Bruce, if we talk about your 3 Ds, so decarbonization, digitization, and deglobalization, how do you think that's changed in the last 12 months? Is there one that will be accelerated compared to where you thought it would do 12 months ago? Everyone
out in the world thought that decarbonization was going to be the big thing, and we're going to everything's going to net zero. That wasn't exactly the case when it was. Today, it's the news story is less that, but I think it's the same. We need power. Preferably, most companies want green power. And the good news is green power is largely the lowest cost energy anywhere in the world, most countries of the world. Therefore, that one just continues. I'd say the two that have ramped up very substantially on the amounts of money they're going in is the digitalization of the world, largely because of artificial intelligence and what's required to build out the backbone for it, which had been coming, but it's now on at way different levels. And because of that, there will be reshoring of industrial capacity back to other countries, assisted in some places by tariffs, I might add. Okay. But even the tariffs might not have worked if you didn't have what's going on with artificial intelligence.
Bruce, when you look at real assets, and this is what you like, and this is what Brookfield, buys, what can we expect from you in the next 12 months?
For my whole career, I've just said the same thing we did before, but we always change. And 50% of the assets we own today, we didn't exist as an asset class to invest into 15 years ago, 10, 15 years ago. I find it amazing how the world changes. And it doesn't change overnight, but in investing, if you don't evolve your investing skills, maybe you do the same things. We're value investors through and through. We like to buy cash flows. We discount them back. We like proven technologies. But if you don't evolve your thinking as to what's going on in the world and try to see forward to where we're going, you get left in the dust. And so we're just always trying to see out in the future where we're going. And that's increasingly what a few of us at Brookfield are spending our time on, just understanding where the world's going and how we can add value to our clients by just being ahead of the game.
Can you tell me one thing that you've seen that you think is new?
I think the application, early days, the application of artificial intelligence in our service and industrial businesses is seeing productivity advances and investment returns of numbers almost never seen before. We're talking 50 to 100% cash on cash investment returns. And that's very significant to productivity, which may mean, if it all works out, that we're in a investment-led era for the next 20 years, which is highly productive and can be deployed into a highly productive and drop big and significant amounts of cash flow to the bottom line. And if that occurs, we're going to have a very strong economy. Of course, cycles have not been repealed, but we should have a pretty good period of time for the next 20 years as that deploys within business. But it takes a lot of capital, and you have to be smart to deploy it with the right people.
Bruce, thank you so much for joining us.
Thank you for having me, Francine.